Welcome back to the Markets Unscripted podcast. I'm your co-host here, Matt Caruso, with my good friend and co-host, Jason Shapiro. Jason, how are you doing this week?
I'm well, thanks.
So last week we walked away with a bearish argument, a bearish point of view, and markets were weak for a few days after that. They really broke into Thursday, so there was quite a bit of weakness, but there was quite the turnaround on Friday. A lot of the turnaround was linked to the whole AI sector. There was news of OpenAI raising money or hoping to raise money, $100 billion with the backing of sovereign wealth funds. My view was a lot of the weakness we had seen was within that group because of capital crunch concerns. I made the pivot and I reestablished positions Thursday evening and into Friday. Markets are still strong today. I thought this would be a good example of where we can discuss kind of the bigger picture view, short-term dynamics, how you can change your mind when news kind of comes out, and also how to trade a news reaction, which I think is different. The way I'll not totally different, but a different set of skills. Different set of skills. Things move a lot quicker, and so we can kind of talk a little bit about that. But before we go into each point of discussion, what are your thoughts with have you seen the news that I'm referring to about OpenAI and the turnaround in the markets? Has that changed your view at all in terms of market action here for stocks?
I thought that the earnings from Micron came out and was positive, and Micron went up quite a bit on the back of that, and of course followed through on Friday. That was the first we've seen of that type of action, really, I would argue, since Palantir earnings. Since Palantir earnings, we have had negative reactions to positive earnings surprises. We had one in Palantir, we had one in even NVIDIA didn't react well to the news, and that was sort of the market tone that was that had been dominating this stuff. And then with Micron, that changed. We had positive news and we had positive reaction. So that's somewhat of clearly a market tone change, which is good. The first step is we have to start reacting well to good news, which we did there. It will be, in my view, an even better sign when we can react well to bad news.
Mm-hmm.
But I don't know what bad news is coming out. It doesn't seem like bad news really ever comes out. So I don't know how it's going to react well to bad news if we never get any. But the sign that at least we are reacting well to good news, and the news that you spoke about as well, which was seen as positive news, right? The fact that we reacted well to that is certainly a much better sign than we have been seeing since I don't know, mid-November type of thing, when the Palantir thing started to fail. So that's a good sign. I think it's a good sign.
Yeah, so for me, this is I always try and focus on a theme when I'm trading something heavily for a number of weeks, months, because we talk about news and you bring up news a lot. It's one of the key tools that you'll look at for news failure and the rest. It helps when you can really follow specific markets closely, in my opinion, because then you understand what the news, whether it's relevant, whether it has any real bearing on the situation or whatnot. So one thing we have been talking about for a while was Oracle and all of the rest, and there's been a lot of these comparisons to 2008, and the tape was really weak going into this week. That's why if we take a look at the triple Qs last week when we were kind of concerned, we were talking last Monday, and the market was looking awful. From there, we did sell off really badly into Wednesday. We got the CPI numbers on Thursday. And then after, for me, was the CPI was questionable because, the government shut down all the rest. But for me, after hours on Thursday evening, when Oracle came out with news about the TikTok deal possibly closing, and after there was the OpenAI discussions about raising that $100 billion at a more elevated $830 billion valuation, and Oracle really moved up strongly on that, and it closed at 179 after hours, very quickly 187, 188. It was an interesting reaction because I started trying to think, who are going to be the benefactors and all the rest. Micron is one that I purchased after hours in that session because I thought this was held down just by what had been some weak markets. But I also started kind of putting back on some trades I had taken off, such as AMD and NBIS and others. What was interesting is there was almost no reaction. I think that kind of goes to a little bit to how beat down that sector has become throughout kind of this November sell-off. Even with that good news, Oracle reacted, but we didn't really see a big reaction in a lot of the other names until the opening of the next morning. So I think it's a good opportunity to kind of discuss about how to pivot around news and kind of the core principles, which I found are true regardless of what the market's doing. I put on a fair sized position in the after hours. And when I didn't see a lot of reaction my way, I kind of backed off. I wish I would have gotten even more aggressive, but I put on a fair amount of size. And it was really the next day when I saw that kind of continuation to the upside and all the stocks start to participate that then I really started to step on the gas just to make sure, because, even news can backfill, can reverse the other way. So that's the way I like to kind of structure myself. Whatever I want to buy, I'll put on maybe 50, 60% of it. And then once I see it kind of progressing my way, then I'll continue to add into that. How do you react when you see news, Jason? Especially someone who likes to kind of react around news events. What's your process? Is it one and done? Is it you build into it? How do you put on your exposure?
So I don't trade in the direction of the news because I'm not a trend follower, right? I'm
Hmm.
not going to buy Micron because Micron came out with positive news. I personally feel and felt at that time that, as you just said, um, Micron didn't react that positively immediately. And I kind of felt that this is all in retrospect, of course, but because the other ones did not react well to positive earnings, right? As we talked about Palantir and all these other ones, that people were probably a little bit nervous to get aggressive long
Hmm.
after Micron earnings, because if they had done that on Palantir, if they had done that on these other names for the last 6, 7 weeks, they got burned. So, of course, because of the fact that they held back, that is why it then did continue, right? Because that's what the market does. It does what you're not expecting it to do. When you play it big, you buy Palantir big because the earnings were great, and then it goes down. When you hold back on Micron because you don't want that to happen again, then it goes up. I mean, this is kind of how the markets are, right? Um, so I thought it was a good reaction. I personally am looking for, as a turn picker, the market to fail on good news. I'm looking for a market to be super crowded long first, and then once it's super crowded long, have the good news come out, and then have the market fail on that good news, and that's when I'm going short. That's how I use news. And for me, that's what my trades look like. And I put the whole trade on basically that day on the close. If, hey, everybody wants to be whatever, short the dollar, everybody is super short the dollar. We get some bearish dollar news. The dollar gaps down on that bearish dollar news and closes up on the day. Well, I'm
Hmm.
buying that close, and I'm buying it versus that low. And I'm putting my full size on, which is essentially how much I want to risk to the low of that day, because that's my stop.
Hmm.
I put it all on right there, and then I either get stopped if it goes through the low of that day, or I ride it until my positioning stuff goes neutral, at which time I will take my profit. That's how my sizing works. I think that if you are doing it the other way, which is you are going with the news flow and with the trend, um, I think it's probably better to do it the way you're doing it, which is put some on, right? And then as it starts to confirm, you can kind of lean in, right?
Hmm.
I think that's a much better risk management for that type of trading. Each type of trading kind of has its own sizing and risk management ideas, I think, right? So for the way I'm doing it, I think it makes sense for my sizing. But for what you're doing there, like you say, going with the trend and going with the news, it's probably better. Interesting, by the way, that we've talked about this many times already. If you look at Micron, relative to what a lot of these other chip stocks have been doing, and
Hmm.
relative to what the Nasdaq has been doing, Micron has arguably been the strongest, if not the strongest, certainly one of the strongest, right? And we are constantly talking about how you want to be looking to play long on the strongest ones. And Micron, I would argue, has been one of the strongest ones during this drawdown in the stock market. So I would do it against the Qs, but Um, just another example of that kind of working.
Yeah. Let's bring that up here. Yeah, I think it,
I mean, look how
oops, sorry.
far Micron was from the highs. It actually made new highs,
Yeah.
while the Qs did not, right? So it's been a relative outperformer. So those are the ones you want to be looking to be playing. Doesn't mean you have to play them immediately, but hey, some good news comes out, whatever it is. To me, those are the ones you want to be playing. We've talked about that before, and that will continue to be examples that I think we can point to because
Right.
that works a lot.
Yeah. Well, it's funny, even with all this kind of volatility and the rest, the things that have done well and continue to do well are, things that people weren't maybe even really looking like ATI, something we spoke about a while back when we kind of started the podcast. And this has just been persistently strong and persistently goes up in the face of even choppy markets. So,
Yes.
there's those different parts of the strategy, and depending what kind of strategy you want to deploy, I run kind of like two variations. And this is a case of just where the relative strength is just an incredibly important component. And really, the news part is really comes down to the timing. And I think that's where, when you use charts, when you use a timing element like that, like you use with news failure, or even I'll use news at sometimes, or even with the charts, I think that's the beauty of it is that, like you mentioned, if it reverses, you're wrong. So when I had put on some trades that night, I put on Micron. I even put on some that I thought would benefit, like an AMD, because if this was brought down because of all of these capex worries, well, if those are alleviated, it should go up. So, putting this on, I think the after was around 202. If this was to push below 200 the next day, 199, I said, I know I'm out. So what is that? A 1.5% risk. And we've since kind of galloped about 10%. They don't always work this way, but I think, again, it goes to a lot of what you do with news failure. Yeah, a lot of them are going to not work out, but the ones that do will go up many multiples of the risk that you put on. So this is a good example of kind of just understanding the context you're operating in to know when you're wrong, which is so different from people who just invest with fundamentals, which I've tried to study every part of the business because it's a passion of mine. I've just always found the concept of just trading purely on fundamentals and trying to kind of build a portfolio that way is so difficult because it's so hard to know when you're wrong, which for me is just a core part of how I move every day in the market. Or else I don't know how I could ever possibly manage risk.
I think as a trader, certainly,
Mm-hmm.
it's the single most important thing to be able to determine. Where are you wrong? Because when you can determine you are wrong, then you can get out, right? And if you know that beforehand, where you're wrong, then you know how much you're risking on a trade. So you know how much X slippage you are going to lose. And that's really the most important concepts in this whole thing. You're going to be wrong. You're going to be
Right.
right. I'm thinking about like the idea of, hey, I trade a news failure and go the other way. You're going with the news because you're going with the momentum. I think that type of thing is going to work a higher percentage of the time. You're going with the trend. You're going with the positive news. That's going to be a higher probability of working, I think, than what I'm doing as a market turn person. Whereas the market turn, should you get it right, ends up probably being a bigger risk reward payout. And again, I talk a lot about this. It doesn't matter what you do, but um, it's pretty efficient, right? And trying
Mm-hmm.
to pick a turn, which is the hardest thing to do, should get you a bigger risk reward payout because it's going to have less chance of success. I mean, that's pretty efficient, right? So it's all kind of, but like I say, buying Micron, on good news as it's sort of touching new highs, the momentum trade, momentum your side is going to have a higher probability of working, I would think, for
Mm-hmm.
sure. So it's just a choice of how you want to trade, or you can try and do both, and you can get the trend and the counter trend type of stuff. Um, just think that that's an interesting concept and an important concept to remember. I could be looking to short Micron because of the good news. You can be looking to long Micron because of the good news, and we can both be successful. I didn't short. I don't trade individual stocks anyway. But if I did, I wouldn't be shorting Micron because it didn't fail on that good news. It went
Yeah.
up on that good news. So I'm not going to short it. Right? I'm going to
Mm-hmm.
sit back. It's not like I think this thing's overvalued. I think that this is all a scam. I think blah blah blah. So therefore, I'm just going to short it. That's what gets you killed.
Yeah.
Right? I always say I don't care what you think. Think it's this, think it's that. Think AI is a bubble and you want to be short. Okay. Or think AI is just about to take off because people don't realize just the power of it, right? Think
Mhm.
either one. Okay. The first guy's going to want to play from the short side. The second one's going to want to play from the long side. Good. But don't do it until the market agrees with you, you know?
Yeah.
And the market is agreeing at this point, like on Micron, that it's good. So go with the good, go with the long, right? And if it starts to fail, then okay, then go with the short. You know,
Mhm.
the market has to, I'll say it every week if I have to. I say it all the time. It's one of my big themes, right? Let the market prove you right before you do anything.
Mhm.
You know, let it agree with you. Don't fight the tape. A million
Well,
times I'll say it.
but you mentioned before, you're not looking to kind of catch the market moving higher because you're looking for the downside. You catch tops or whatnot. I know you were long near the tariff bottoms in April, soon after, right in around that area, and you told me you kind of scaled out of that maybe a month or two ago. You can correct me on dates if you'd like, but so I'm just curious from your perspective, from how you like to kind of work as a reversion to the mean type of trader. If this trend just kind of keeps rolling on, you're just going to sit back and wait still for it to fade the ultimate top. Is there a certain point in time? Like I know we spoke about Citigroup recently, which is something you brought up, that the financials would do well based on your bond analysis, which is proven to be great. At what point will you ever play in direction of trend, or it's just like, hey, I got enough to choose from these kind of counter trend moves. I just don't want to kind of play in that realm.
I'm not just going to do it to do it, you know. I'll do it when my stuff sets up. I mean, I currently am looking at the market like this. I'm calling it the null hypothesis, but we can just call it the trend, right? Both from a price perspective and from a kind of macroeconomic perspective, if you want to call it that. You know, what do we have? We have this AI thing going on, and we have this liquidity thing going on. And I at this point, I'm not the only one talking about this, but you've got an economy that seems to be growing pretty darn well. Um, you have a thing going on that looks like it's going to be the biggest productivity enhancer in the history of mankind. And while those things are happening, you have a central bank that's, at least in the US, that's cutting interest rates and looks to be like they're going to continue to cut interest rates. And you have creation of liquidity and money. So
Mhm.
that could be, from a macro perspective, the single most bullish underlying thing that I have ever seen in my career. And it's been this way for a while. So why would you fight that? And
Mhm.
what it means, what it should mean, if those things are correct and if those things are going to continue, it should mean stocks up. It should mean, for the most part, commodities, in particular the metals, up. It should mean more or less dollar down. And it should mean yield curve steepening. That's just very basic macro stuff. And if I were trading
Mhm.
a 100% macro portfolio, that's exactly what I would have on, right? Long
Mhm.
stocks, short dollar, along the yield curve, along the commodities. And quite frankly, those would all be working, right? Some of them pretty seriously, like that one, right? Um, those would all be working. So the question is, as a turn picker and not a just trading the macro trend, what do I do if I
Mhm.
can't go with those trends, right? Um, well, what I'm looking for, clearly, at this point, almost any macro strategist will be talking about those things that I'm talking about. And we're seeing it more and more, right?
Mhm.
Schiff and all these people are all talking about that exact thing right
But they
now.
fought it for many months. Like off the
They
tariff
fought
bottoms,
it.
everything was going to be awful. They fought it for
No, they
very
fought
for
it.
many
But
months.
now they're on it. Now they
Mhm.
see it, right? And particularly the liquidity thing and all this stuff. So the question becomes, since the market is a discounting mechanism, when is this stuff fully discounted in?
Mm-hmm.
And maybe even overly discounted in? And the risk reward becomes favorable to go the other way. Well, I look at a few things to figure that out. One, I look at positioning. Is everybody already positioned for that? Therefore, the risk reward has changed. Well, from what I see, my answer would be no. They're not overly positioned. Are they more positioned for that than they were 6 months ago, 8 months ago, 12 months ago? Yes.
What are you looking at for positioning, Jason?
Well,
Like,
I look at the commitment to traders data mostly,
okay.
right?
Is that caught up now? Is there any kind of recent positioning in terms of market or commodities that you can
It's
point
very,
to?
very close to caught up.
Okay.
Tomorrow, they will do a release that will catch us up.
Okay.
So we're 1 week behind still. But tomorrow they will release it and we will be fully caught up to last week. And then we're
Okay.
going to have Christmas. So we're going to be back a week. But then on Monday, they will release and we'll be fully caught up again.
Mm-hmm.
So we will be fully caught up. So I don't see the positioning for the most part is way overextended. There are places that are starting to show. Gold and silver is not one of them. NASDAQ maybe is one of them. Certainly relative to the other indices, NASDAQ is there. But that's the first place I look. And then, of course, the second place I look is the market action. How does the market react to this news? So let's just say we all know this already, right? We all
Mm-hmm.
know of the liquidity thing. I don't believe everybody's all in on that. You look at the cash balances and the amount of money sitting on the sideline still is a lot.
Mm-hmm.
I can just look towards myself. I took my bonus from 2024 and I didn't pile it into the stock market, which I usually do, right? I usually just put it into either Qs or SPYs, right?
Mm-hmm.
And that's where my money sort of sits. My long-term money. This money is all for my children, so I don't really care what's going on in the next 6 months or whatever. So I usually just put it in Qs and SPYs. I did not, for whatever reason, do that this year. So I am stuck in a lot of cash or bonds or whatever. How am I going to get that in there now? And if that's where I'm at, my guess is that's where a lot of people are at, right?
Mm-hmm.
So there are a lot of people sitting on the sideline. I mean, there's a lot of people talking about how much money they're making in their account and the great returns that they're making, but what they don't talk about is the money that's not in their account. You know what I mean?
Mm-hmm.
Here you go. I made 50% on my stock portfolio this year. That's great, but if your stock portfolio is only 20% of your overall, savings, then it ain't that great. And my feeling is that's more likely where most people are. So I don't think that people have piled in, and I don't know how they ever are going to, because I don't know how I am ever going to. How are you going to end up chasing this all, up here? It's a very difficult thing to do.
Well, I think that's why, when we started the podcast series, we were talking about these trends, and I was saying usually when there's a strong theme, it ends in a climax top for that reason. People just can't take it anymore, and it ends up being the reverse of fear. Like either it's FOMO, fear of missing out. Like just get me
And
in
I
there.
really don't know that that's
Climax.
ever going to happen.
Mhm.
I question if that's ever going to happen, because
Mhm.
people have been around long enough that they've gotten burned trying to do that.
Mhm.
I always say my generation tried that in late 99, early 2000, and they will never do that again. And the next generation probably did that in sort of 21, right?
Mhm.
We saw a lot of that going on in 21. And then 22 came and a lot of these stocks lost 70, 80, 90%.
Yeah.
So I don't think they're ever going to do that again. So I don't think that that's ever going to happen. I'm not going to say never, but I think we're a long way from that happening. I really do. Doesn't mean the stock market can't go down, especially for periods of time. But in general, I don't know if the whole world is ever going to FOMO again, which means that the wall of worry can continue to be climbed for a long time, I think. Um, we'll see. But,
You know what?
getting back to my original point, which is, so I'm looking for these things. If that's the overall thing, the overall trend and the overall macro trend is going to get you long stocks, along the yield curve, short the dollar, along the metals. I am looking individually for where any of those can start to be faded,
Mhm.
right? Which is going to be a function of positioning. Okay, everybody's too long. Okay, everybody's too short, whatever. And then market action. And that's kind of what we had in the NASDAQ. when Palantir failed, right?
Mhm.
At that point, the positioning was showing people were overly long Nasdaq. The market was failing on good news, and therefore was a good short idea. And you still haven't, maybe starting today you are starting to, but you still really haven't lost money on shorting the Nasdaq on Palantir Day. Um, but we have to realize that A, these trades don't always work. B, things change along the way, right? So one change being, like I said, the market started to react well last week to good news, whereas up to that point, it really wasn't. So that's one, right? Um, that makes you rethink the whole idea of that. So that's kind of how I'm approaching it, though. Um, this is the trend of the price trend. This is the trend of the macro trend. I don't see that going away at all. I see almost zero possibility. Where can this stuff stop? And I think the answer is if we run out of money, because obviously it's
Mhm.
taking a lot,
Which is
incredible
what
amounts
caused
of
the
money.
November drop was the fear of running out of money with the OpenAI situation.
Right. I mean, we're seeing the numbers. They're incredible, right? The numbers are incredible. What it's going to take to pull all this off, right? And could even get higher. I mean, Musk is talking about putting freaking things in space, and I mean, what could the cost of that be?
Mhm.
It's numbers like we've never seen before. But it appears that the government is willing to provide that money, right? That they're willing to print it, they're willing to create it. Um, so until we run out of money, I don't see how that's going to stop, and I don't see how we're going to run out of money. Now, the markets could say, whoa, boy, right? You're printing too much money. And we will see that. That will show up in bonds, in currency at some point. If we're going to see it, that's where we will see it. So I'm watching that very closely to see that.
Mhm.
But they can't run out of money because obviously they own the printing press. And B, everybody knows that this AI thing is the most important thing for national defense as well.
Yeah.
Um, so they're not going to stop, right? So to fight it, as much as we were talking bearish last week, it was more sort of tape reaction type of thing. From a bigger picture perspective, to fight it is an incredibly difficult thing to try and fight. And again, if the people get too long this stuff and the market starts to fail on the good news, I'll fight it. I'll go the other way. That's what I do. But you have to think about what you're fighting. If you are fighting this whole thing, right? Um, and again, I'll say it for the millionth time. You have to let the market tell you when is a good risk reward time to fight it. But I would certainly want to have at least somewhere the other side on in
Mhm.
some way, shape, or form, taking advantage of these things because it's the most bullish backdrop I think I've ever seen from
Mhm.
that point of view, from the macro point of view, right? And I always want to fade that. And I always want to fade when everybody sees it because then it's discounted in already. Every trade that I make, I'm making short something that everybody is bullish on, and they're bullish for a reason, right? Or a number of reasons. Or I'm buying something everyone's bearish on, and they're bearish for a reason. That's what I do. So I'm not worried about fading it, but you have to start from the point of view of what is it that's driving it? And then B, does everybody see it? Is everybody positioned for it? And therefore, is there a chance of turning? So, and the backdrop, like I say right now, to me is it's pretty incredible.
Mhm.
So I would want to be participating on that side of it first, and then we can start looking for ways and reasons and positioning and the market action to try and fade it and catch it the other way. But um, you know that's kind of how I'm approaching it from here. Now,
I think people have
uh,
a hard time kind of in their mind separating the fact of having like a longer term bullish argument, but then after the short term adjusting for risk or adjusting for the tape, which is basically what, both of us have been talking about these bigger themes since we started the podcast. And last week we both saw, which is interesting from different points of view, we saw the tape weakening, which it fell out of bed pretty strongly for a few days before kind of turning higher. But that's kind of like the job of someone who's active in the market is to read that because, the truth is, CPI came out helpful. Then there was that news at Oracle and OpenAI and all the rest. I mean, you have to deal with the facts that you have in front of you. You don't know that that's going to come out, and then you pivot accordingly. So I think a lot of people have that kind of a difficult. They kind of get entrenched in their thinking, and then have to have a hard time kind of pivoting around. But you know,
That's what trading is.
yeah,
Investing, trading is two different things, right?
yeah,
So that's what trading is. You have to watch and pivot and watch for the reactions, and then the reactions can change in a day. The reaction to the news or whatever could be super negative today, and then tomorrow we can get another piece of news that's negative, and the market could have a positive reaction to it, right? This is a way of judging where money's going and how people are reacting. That to me is what news is about. You're not going to know the news. You can't know the news, but you can know and observe how the market reacts to the news. And that's what I think is the tell that we're all kind of looking for. And it doesn't work all the time, but over time, it will work. We could get a bullish piece of news today. The market goes down on it. You can sit here and say, oh, the market acted horrible on that. The tape is bad. And then tomorrow we get a bearish piece of news and the market goes down and then it rebounds and goes up. And you're like, oh, actually, it reacted very well to that bearish piece. And the next day it could do the opposite again. I mean, that's what whippy markets are. And that's kind of what's been going on here, right? We're getting kind of whippy markets. And you're getting that type of reaction. You're getting some bad news reaction to good news. You're getting some good reaction to bad news, So that kind of shows, and we don't see really positioning super biased either way. So that kind of is a good setup for a more whippy market. But I'm just saying the base case, the base macro case, and the market action is agreeing with it is that thing, right? Which is based off the whole AI miracle and the whole and the whole liquidity thing on top of it, right? That's what you're fighting. So if you want to fight that, it's fine, but you better at least understand what's going on, and you better at least wait for the market to kind of, to confirm what you're thinking before you do it, because you're fighting an animal here, right? And, even like that, the argument of, if we look into the bearish side of it, or what the bearish people want to say, okay, they're creating all this liquidity. Okay, they're printing all this money. Well, as an economist, I believe that printing all that money is inflationary. Okay. On the surface, you can say that. And I have said it. Milton Friedman, right? Inflation is and always will be whatever a monetary phenomenon, right? You have more money than you have goods, and you get inflation. But on the other side of that, if that money is being invested into things that are creating productivity, then that's not inflationary, is it?
That's the clear differentiator. That's the big difference. If it's used to buy TV sets, it's inflationary. If it's used to go into productivity, it could actually have a deflationary impact in reality.
That's right. So you got to watch that too. You got to watch this. This is so inflationary thing, right? And what we're talking about here is what I was calling early in the Trump administration, the Trump miracle, which is you're going to create a shitload of liquidity. That money is going to get out there. It's going to pump everything. It's going to make us all rich, and it's going to do it without inflation. That's the miracle. And it doesn't have to be about Donald Trump. He could just be the man that happens to be sitting in the chair when this AI miracle is going on. I mean, that's usually the case, obviously, with the politicians, is that everybody always wants to blame the guy who's sitting in the chair, or give credit to the guy who's sitting at the chair at the time of what happens to be going on is going on, right? What happens to be going on is we're getting this AI thing, and who happens to be sitting in the chair is Donald Trump. So he could be a huge beneficiary of this whole thing.
One thing, though, I would maybe give as a bit of a props to Trump is, if you go back to FDR in the 30s, he's famous for saying the only thing we have to fear is fear itself. Promoting a sense of positivity and wanting to build, I think is a general national good that does have, it's not just about pumping. I mean, there obviously is an element if you're printing the money, but getting people into that positive attitude. And again, FDR was a Democrat, Trump is a Republican. So it's not political party, dependent, but inspiring that in a population has a net good. So of course he's not by any means the guy who got AI going here. But in terms of like the bigger picture, I think it is a help to have people with a positive perspective to try
No,
and
I agree. And I'm no Trump hater.
Mm-hmm.
I don't suffer from whatever they call it, Trump derangement syndrome.
TDS.
I mean, if we're going to get into it, I do think the guy's a douche as a human being. Who comes out. I was never a fan of this guy in Hollywood whose kid killed him. Guy made some great movies. I was never a fan of his whole political push and all that. But to say things like that on the day after the guy had a tragedy, his child was a drug addict and killed him. Like, to me, it's just so douchey.
Mm-hmm.
And he does that consistently, right? And so that makes me not a fan of him personally, as well as some things from the past. But who cares?
Yeah.
In terms of this, you have to be able to separate that. I can dislike Donald Trump as a human being, but not dislike the things that he is doing, like you talked about, right? I truthfully think that some of his policies are very good, including what you were talking about, right? Light a fire under people's ass, get them positive, that's a big part of the psychology of it, right? Get them to invest, get them to, one creates the other, right? So I'm a fan of that. And it goes both ways too. He might be the one that's lucky enough to sit there while AI does all this. He'll take the credit. Maybe he doesn't deserve the credit, but it doesn't matter. That's what politicians do. But it works the other way too. I was talking last week. People blame him for the insurance, the health insurance thing. Because he happens to be sitting in the chair right now when the health insurance thing is starting to blow up. But is that really his fault? He's not the one that put the health insurance, that put healthcare where it's at right now. That's been something that's been building over 50 years, right? So to put the blame on him, it's just as ridiculous, But look, this is what politicians do, right? This is what people that follow politics do. Our job is to say, who cares? What is happening actually, and what is the market doing actually, right?
Speaking of politics and conditions and all of the rest, one period I like to kind of compare this to, which I find interesting, is the mid 90s. And this kind of goes back to what you're talking about, like, we don't always have to have a climax top or whatever and that kind of stuff. And, the climax top for the .com era came in 99, but we had a lot, actually the best year of the 90s for the S&P was 1995. It wasn't 99. That was for NASDAQ. And if you go back to 1995, let me just bring that up on the screen here. There was some really interesting kind of comparisons that I've been talking about for months, kind of with clients and all the rest. If I bring up the NASDAQ here, we go to a weekly chart. In 94, Greenspan was so, it's like every general, you're always fighting the prior war. Greenspan was so worried about inflation that this correction here in the NASDAQ, for those who are unawares, Greenspan hiked rates, I think it was from 3 to 6% during that period, because he saw that the unemployment rate was getting low, and he said, if unemployment rate is low, that's going to lead to labor inflation, and we don't want that inflation. So he was hiking rates throughout this period, although there wasn't any signs of inflation. And then when inflation didn't show up, he actually had to start cutting rates up here. I think the first cut was in July of 95, as the market was at all-time highs, and that ultimately kind of caused this massive, push to the upside as you got this easy money. So, what's interesting to me is if we take a look at the past, 6-7 years, let me just go to a current chart. Obviously, it's been up in a way generally, but if you look at the number of bear markets we've had, it's been a pretty vicious few years. I mean, you had 2018, you had the bear, you had COVID, then we had the big rally, then we had the 2022 inflation debacle. 24 was fairly stable, except kind of the midsummer drop. Then we had another kind of big quasi bear market here in 25. I almost wonder, like you were saying, everyone doesn't want to chase stocks or get, into that kind of climax top. Do we maybe enter a period like the 90s where you have this productivity tool, you have a Fed who's kind of cutting rates with markets at all-time highs. There's no major wars in the world right now, kind of like mid-90s where we got to, and the market had this multi-year rally just kind of interrupted by, small, localized panics on different things. Most of it was kind of international type of in nature. it'd be interesting to see if that we're going to end up walking into one of those situations, because a lot of the underlying super bullish case, like we've been talking about in the longer term, is really reminiscent to the mid 90s, in my opinion, versus 99, which everyone talks about.
I mean, first of all, I don't know any rich bears. Okay? Everybody I know who is rich has gotten rich by being a bull. That's just a fact, all right?
Mhm.
I know, like, there's been what's his name that ran the bear fund for all those years, and he was a genius short seller and all that, and he's probably pretty rich, but he ain't as rich as he would be if he was bullish. Even the people from The Big Short, did they make $1 billion on their Big Short? Sure they did. But you know what? If they had taken all that money and bought the market after the crash and rode it till now, they would have made 20 times more, right? The richest friend that I have, who was the poorest friend I had, quite frankly, when we were growing up, his parents were on welfare at the time. He and his father got into real estate many, many years ago in the 70s when we were very young, buying up some real shitty real estate in New York City, which was in a massive recession back then and was falling apart. And he was buying up this real estate cheap with his partners in the shittiest neighborhoods that are now called, Soho and Chelsea, and which are now the trendiest neighborhoods. And they were buying up, parking lots was the business they were in, right?
Mhm.
And by the end of it, they owned about 40 parking lots in New York City. And now they own no parking lots in New York City because every one of their parking lots is now a 50-story apartment building that they own, right? But they still own it, right? They haven't sold anything. So this is the richest friend that I know. Bullish, long, doesn't leverage so that when we have things go down, he isn't forced to sell. He can stomach that, right? It might not be the greatest of times when that happens, but overall, he gets to hold on to it and they will never sell.
Mhm.
Those are the people that I know that have gotten the richest. Long-term bulls, right?
Mhm.
So we got to remember that first of all. The error should always be to the long side, right? On assets. As far as what you're saying, yes, I think we can compare it to the conversation that we just had about Micron, right?
Mhm.
There's two ways to do it. You can go with the positive news and the trend, which is going to have a higher probability of working, or you can be a jerk like me and try to fight it, And when I say jerk, I mean, truthfully, that's what I do. That's what I offer my clients. I am just as willing to go long things as I am to go short things. I'm not always looking to go short. I can go long things when everybody hates them, everybody's short. I'll go long them, which of course is where I make more money, right? Because of the upward drift, but in particular in stocks. But it's the same thing. Do you want to go with this macro miracle that's going on here? Creating money, lowering interest rates into a productivity thing, into a growing economy. Do you want to do that? Or do you want to try and go the other way? That is going to work, just like the whole getting long Micron on the good is going to work more often than not. Right. And if you want to try and fade it, okay, again, wait for the market to confirm it and fade it and all that. Great. But it just goes back to the same thing, going with the trend, this is not just a price trend. This is a price and a fundamental, very, very strong trend. So fighting it is going to be very, very difficult to do. As we just saw, was the market acting poorly from mid, October or whatever, or November? Was it acting poorly? Yes, it was. Could you have made some money on the short side in there somewhere? And particularly with the NASDAQ where it was the most crowded long? Yes, you could have. But look how quickly it comes back, right? That in itself is telling you something, I believe, So I think that's kind of the way to think about it,
But you
all
bring up
these
a good
things.
point, even about your buddy saying, he wasn't levered long. I think that's the problem. A lot of people, there's two elements. There's many elements to this process. One is the leverage part, because, we're all Look, most guys get into trading were young guys, right? So you're aggressive and you want to make it quicker. And trust me, I know the feeling very well. But
Yeah.
that's ironically what leads to kind of all of the trouble. And even when we look at the 90s, we look at these stocks. I'll always kind of, when I teach or I talk about these things that we're doing, if you really go back and you study, say, hey, look, I think we're in a .com era like the 90s. Great. Go back, study Yahoo. On that move up of like 7 or 8,000%, you had several 40% plus drawdowns. Guess what? If you're all in, and it drops 45%, you're out. You're drawn out. You're done if you're on full margin. So, understanding how aggressive to be with these things in terms of leverage. It's like what Charlie Munger said. There's three things that get people. What is it? It's liquor, ladies, and leverage, right? And the L is an important thing. And I think your friend with the real estate is a perfect example. But I think even more so for trading because it's so readily available to just always be on full aggressive mode. And that's really what gets most people in trouble. Even in minor corrections like November, full leverage, you could have some pretty massive drawdowns.
And then that screws with your mind and your confidence as well.
Yeah.
Which we've talked about before too. That's a big part of this game, right? Where your mind's at is a big part of this game. You have a 60% drawdown, you have a 70% drawdown. How are you going to get it back? Because now your confidence is gone.
Yeah.
These are very hard things to explain to people or to get people to listen to until they've gone through it.
Mm-hmm.
I don't know anybody who listens to those lessons. Including myself, by the way, until you've gone through it, and then you learn it. And hopefully you're young enough that you can rebuild and have plenty of time, to make that money back, right? When you're young, you've got time on your side, you can blow out. And as long as you learn from it, I mean, I blew out more than once when I was young
Mm-hmm.
because I was making, 500% or whatever, one is the other, right?
Mm-hmm.
Um, So, hopefully you do that and you learn the lesson while you're young, because if you're 50 and you blow out, you don't really have a
Yeah.
lot of time to try and make that all back.
Yeah. Well, so shifting to the current market then, kind of perspective, I think it's a good review of kind of like the bigger picture of what we're looking at and trying to move with the current kind of news and all of the rest that we're looking at. I know you spoke about the banks. I think it's a good example of where even your understanding of the commodity market or the interest rate market through the COT can be super helpful. And the steepening of the curve and all the rest is that it really lit a fire under financials. This is done very well. Has there any changes in the yield curve that kind of would make you think it's getting a bit extended at this point, or any views on that, Jason?
Like I say, other than the fact that everybody is starting to see the story now, right? This is a
Hmm.
story that we've been talking about, like in Crowded Market Report for God knows a few years, right? Um, it seems like a lot of people are now seeing it. I've been pushing the dialogue of AI and liquidity. I've been pushing that for I don't know how many years, 2, 3 years. A lot of people are on that now. So that is the only thing that makes me nervous here. But I really don't think that the money, which is the most important thing, is all in on it. I really don't believe that it is.
Hmm.
So I don't see why it needs to end anytime soon. The returns and the risk reward have shifted a little bit, but I still think that there's plenty of money that is sitting on the sidelines that can make these things continue. These are the trades that so-called make sense right now from a
Hmm.
macro perspective. At some point, what makes sense makes too much sense, becomes too obvious, and then turns. That's how turns always look. As a person who does nothing but trade market turns, I can tell you that's how turns look, right?
Hmm.
Bull markets turn on the most bullish news. Bear markets turn on the most bearish news. First they turn, then the markets go, and then the fundamentals start to change, right? Um, but the markets have not turned. The markets have not failed. The fundamentals clearly have not changed. The fundamentals there and doesn't look like it's going away anytime soon. Um, so it's just a question of sort of, I think, riding those ideas until they start to not work, until the market is saying these things are not working anymore. That's what I think the play is here.
Well, you speak about things turning. That brings up the question, like how much time makes it a corrective of enough market to look for a long. So, for example, like the Qs had been basically nowhere since middle of September or near the end of September, just as of December 17th. You can call this one big kind of real consolidation, choppy period, etc. Would this kind of reversal higher be enough of like, let's say we would have had bad news. I know we had good news and went our way. Given this kind of sideways consolidation, if there would have been bad news and we would have gone positive, would this have been enough of a corrective period for you to say, hey, look, the general trend is up like I thought, and this is this bad news that's reversing upwards? Is that a way you would have approached it? Is this a deep enough correction? Do you look at just price correction or time correction? How do you look at that, Jason?
I don't really look at time necessarily, or price for that matter. For me, if the market were to start rallying on bad news, that would be good, but I would need the positioning there. The positioning is not showing people super short NASDAQ, so I wouldn't really be buying Qs, which
Okay.
doesn't mean that Qs can't go up just because I wouldn't be buying them. The Dow, to me, is where people are the least long. So, and no coincidence, the one that's been outperforming, right? So rally on bad news there would be where I would be looking to be playing
Mhm.
the long side.
Which I guess
Which, listen, if we go into another extended bull run, there's usually the Qs are going to outperform. So don't come at me and be like, you told me to buy Dow and the Nasdaq outperformed. I should have bought Nasdaq instead. You suck. This is a risk reward thing. I don't know where it's going. What I'm telling you is risk reward wise, the Dow to me, based on positioning and all that, is a better buy here. Doesn't mean it has to outperform, but it probably means that if it goes wrong, it will not lose as much as the Qs as well, which is normal because the Qs are higher beta, so they're going to go up more in an up market and down more in a down market. That's just how I do it. The Dow would be where I would be looking to be long here.
So,
That's
as we
me.
go into near the end of the podcast, you always like to kind of look at what's working, where that relative strength is, that strong tape. Again, if you're enjoying the podcast, like, subscribe. We're going to build this up and make this the best podcast for people who want real discussions about market action instead of just opinion. But we spoke about Citigroup. I think financials have been one of the strongest places which you've nailed. This is what you brought up a couple of weeks ago. ATI materials, especially specialty alloys, have been doing phenomenally. This has been very strong. This continues to lead, which is a good sign. Some others around, the technology robotics space. There's Teradyne, something we spoke about a while back, still holding, not quite as rocketing to new highs as Citi, holding in very well. I would also look at to a lot of the kind of optics side of the AI. The supply chain is starting to see demand in different areas. This is one Sienna. It has kind of its neighborhood stock, which is Lumentum, have been tremendously strong. I've spoken about Viav. Interestingly, Viav and Lumentum used to be JDS Uniphase, which was one of the biggest dot-com winners in the late 90s. Viav does the testing equipment for Lumentum's products, pretty much. This has been generally strong. So there's still a lot of places of a lot of strength. That's where I've been putting my focus and where I'm trying to kind of position long. Interesting for the first time, so a lot of the non-AI stocks like ATI and Citi are looking good as well. So it'll be interesting to see this Santa Claus rally period here if the seasonal can kind of keep pushing things into the new year and how we react. And I know a lot of people are concerned about tax selling beginning of January because there's been a lot of winners this year. I don't personally think that will outweigh
Why would you tax?
shortcomings.
I don't understand it, but why would you tax sell in January? Don't you have to tax sell in December?
Well, no. So what everyone is worried about that I keep hearing is that, hey, if people have big gains, they're not going to sell in December. So as soon as January hits, they're going to do their selling to lock in their profits.
Oh,
Which,
I see. They don't want to sell in December because then they have to pay taxes. Whereas
yeah.
if they sell in January, they don't.
So this is something I've been hearing a lot of questions about, but I don't think
But what
that's.
about tax loss selling? Don't people want to do that too? Don't they want to sell their losers before the year ends so that they can write that off against their taxes?
I
I
still think
never
there's too many losers this year. Marcus Park has been a good year, I guess, but it's just the winners you got to take care of.
I don't know. I mean, I was looking at these lists of stocks this weekend. They're not down on the year, but you got a lot of stocks that were down a hell of a lot, man, from their highs.
Mm-hmm.
A lot of these like IPOs and I mean, I saw some of these things down 50, 60, 70%. Even Oklo, which is up clearly a lot on the year, had over a 50% drawdown from the highs.
Yeah.
I don't think a lot of people got into Oklo in January. I think they started chasing it right about where you are right
Hmm.
there.
Hmm.
That's where people started getting excited about Oklo, right?
Yeah.
And if they were getting excited about Oklo all through September, then they're sitting on losses on that boy.
Yeah.
Um, I don't know. I don't know. I think trying to trade those type of things are. I hate them. I hate all of those thought processes. So I therefore, and I could be wrong, but I'm not the person to ask because I think that they're all ridiculous. Seasonal stuff I find to be ridiculous. Could I be wrong? Sure. Um, Analogs I find to be ridiculous. Could I be wrong? Sure. Things like that, tax loss selling or tax selling in the new year, I find to be ridiculous.
Hmm.
People who are making investment decisions based on that stuff deserve to lose money. So therefore, I think it's ridiculous. That's what I think.
Well, my view is there's
Shoot
so
me.
much we're trying to
I could be
accomplish
completely wrong.
already. Sorry, go ahead.
So, no, go ahead.
I would say there's so much we're trying to understand already, and the general flows. I think people will just naturally. I think people have so many concerns when they start actively trading the markets. They kind of fill their plate with all of these ancillary ideas, and there's a million of them because people will talk about this and that. I find it very difficult to trade off of a calendar. Like I've seen the work, and there's say it's September 18th is the worst day of the year statistically, so I got to be short. And I've never liked trading around a calendar personally, and I find whenever you want it to work, that's when it fails. And I've tried it, and I don't use it anymore because it's failed and it wasn't kind of reliable enough. So
I
it's
mean,
not
just
part of
look
my
at this
philosophy.
year. Everybody thought September and October were going to be the bad months. They went straight up. And then November, December were going to be the great months. And it went down all November and started going down in December and is now coming back. Again, it's discounted, man. If people can observe it, and then nowadays it's so easy to observe this stuff, right? Then it's already discounted
Yeah.
in. So I just don't see where there's an edge there. Can markets go up in months that have traditionally they've gone up in? Sure. I mean, but does it have any statistical significance? Markets go up 70% of the time anyway. So
Yeah.
I personally don't find value in that. I say this with everything. If you do and it's working for you, then by all means, screw me. Who cares what I think? If I say it with everything. I argue with people all the time. I don't think this works. I don't think that works. I don't think this works. But if it's working for you, who gives a flying crap what I think? If it's working for you, it's working for you. People think that what I do doesn't work. Okay. But if it's working for me, then I'm going to do it. It's just like you said, you used to do this, it didn't work, so you stopped doing it. That's the ultimate
Yeah.
judge, not Jason Shapiro. Who cares what Jason Shapiro thinks? The ultimate judge is your P&L. If it's working for you, then keep doing it.
There's nothing worse than sitting there expecting an 80% update because it's a day of the calendar, and then you're way too long and the market goes way too down, and you're saying this stuff is just, I should just focus on the price action in front of me. That's where I got that from years. When I first started years ago, it was one of the things I read and tried. But I think part of this business is just trying everything and seeing what works for you.
It
Uh,
is. Trial and error's got to be part of it because how do you know otherwise, right? But I think that what you just said there is the most important thing. Just focus on the price action in front of you. I think that's what's going to focus and understand what's happening with the price action in front of you is what's going to get you a hell of a lot closer to success than anything else.
Well, next week we're going to get the COT updated. We haven't brought it on the show yet, although it's a big part of your process. We've been always talking a lot about kind of the relative strength stuff I do. So it'll be cool if we can maybe bring that up next week for those who want to tune back in. Again, like, subscribe if you enjoyed the podcast. I want to wish everyone a very Merry Christmas, Happy Holidays, safe, good time with family and friends. And thanks for listening. And we'll be back soon, Jason.
Awesome. Merry Christmas to you. And I don't know if we're getting together before the new year or not. I guess we are, right?
I think next Monday we can do another one.
Next Monday is, the 29th. So
Yeah.
we can say Happy New Year then.
Sounds good. Thanks again, Jason. Talk to you soon.
All right. Great.